Hey guys, Mike here. So, oh boy, what a double reversal, right? We had a reversal from last night in the market. They drove it up in after hours, and then we got the economic data, which I'll show you, which absolutely skyrocketed the market. And then we got the old rug pull, right? After lunch, and so it went, shoom, see you later. But it wasn't everything, right? Once again, here is tech getting this rug pull, but other stocks are doing what? They're getting bought up. We're going to show you that. Plus, we'll go into the NVIDIA chart and also some other data that came out, which is very important to watch from here on out for sure. So do not miss that. And if you look right here, this is real quick the data that came out. You can see GDP, whether you believe in numbers or not, don't matter. It's about what the market thinks. Revised up to 3% from 2.8, and personal consumption from 2.3 to 2.9, which is absolutely crazy. But you can see, you look at what norm was back in 2010, 2020, you look what it is now. And so again, the market loves to see that. It's like, well, what we worry about? Recessionary fears, right? Well, those numbers, whether they're cooked or not, kind of shows no, okay? And I just got done filming a detailed video for our members on this. It's like 15 minutes long, going over all kinds of data points to kind of show something like this. Now, you look at jobless claims. What do you got? Well, the initial jobless claims are going down, coming in less than they actually expected. Continuous still going up, but again, right where they thought it would be. And it's about the number. See the number? 230,000, 250,000. Normally, what you're going to see is in the last two real recessions, not 2020, but .com and the financial crisis, it was between 325 and 400,000. Okay. Now, nothing good to say about the housing market. July pending home sales minus 5.5% versus 0.2% estimated. And again, the market's just a hot mess. Okay, we go back and we say, okay, here's what actual is the norm, and here's where we're at. Well, this is one of those few things we are way below the norm. Of course, why? We have no inventory, and people are sitting in 2 to 3% mortgages that they don't want to give up. And here's the other reason. Look at what it costs for a down payment. If you're getting a traditional mortgage, like $67,000. This was the norm for many years right here, between like $28,000 to $35,000 for like 10 years. And so that's a lot of money. And again, people aren't buying homes. Guess what they're doing with that money? You say it yourself. They're saving it, investing it, or it's rescuing them right now if they've lost their job. All right, now looking at the futures. You can see obviously we got the big rug pull right there. After lunch, 1.8% drop on the NQ or the QQQ, whichever one you want to look at right there. So massive drop down, but you can see what they did overnight, right? I mean, overnight, you see that big push up? I mean, that's crazy. I wish I'd have held my contract. I got out about 11, so I had to go to bed, but, made some money. But man, between like the hours of 6 to like 8, whoo, man, they just drove this thing up, especially once the 8:30 news hit. See you later, sky high. And really what we got to see here, guys, because I was looking to see, are the bulls going to step back in? And it looks like they did right there in that area, which it blew through right there. And so we got to see if they're going to push this up overnight again, right? Coming up into this area, this imbalance, liquidity, whatever you want to say. And so they're going to push this up overnight again, right? Because we do have huge news coming out tomorrow, which I'll show you, which absolutely the market will react to for sure. Or are they going to fail? Because if we break this level that we just bounced at, then it's looking pretty rough. Okay, that's just the way it is. And so we just got to see. Again, I would give the bulls the benefit of the doubt right now if they can push through that level and get above this. But we'll have to see. We're just going to have to see, because when you look over here at the SPX, you can see we're not above this trend line right here. We try getting above it. We failed once again. You can see this level is just a beast, right? I mean, we have hit this level 1, 2, 3, 4 times in rejection. Normally, it'll weaken and you break through, so that could absolutely be the case. Maybe tomorrow's news does it. We'll have to see. But again, if we can't get above that, and now we reject this trend line, all of a sudden, you're starting, actually, let me get the arrow out of here. Get the little circle. You're starting to put this in play, and you're starting to put this gap in play now, okay? And so the fact that 5,600 did not hold, not a good thing. And so, that's why you're putting these things in play. You can't predict where it's going to go because the market's going to do what it wants to do anyway. But when you look at the Qs, right here, you're stuck between, both those gaps, of course. But more importantly, we talked about what? The 50 moving average. I wanted to see if we got rejected. That was the big thing, okay? We'll take the 200 away, and we'll pull this up, and you can see what happened here. end up getting rejected. Okay, and so we close below it. That does not mean you cannot break above it, but you know, when we look at this, that's going to put this gap right here, which I'm actually going to correct this, in play now. Okay, to get filled tomorrow if we decide to sit here and turn down on what the data is, the fact we got a 3-day weekend coming up, all that good stuff. But when you look in the past, you know, it respects its 50, and you can see what happens when it rejects off the 50 in the past. Hasn't been a great thing. Okay, and so that's what you got to keep in mind on this one. Now, looking over here at IWM, we can clearly see on this one, I don't like the fact that it's below that trend line right there now. That's not a good thing. Still above the moving averages, still above 2024 high. But when you really look at this thing, you're kind of going, wait a minute, that looks like a lower high to me. And so that's not, it's like it's trying to form that lower high, which is not good for IWM. Okay, and again, it's weird because we got rate cuts coming up and all this fun stuff. How's that going to affect it? How's it going to affect the market and everything else? But that is not what you want to see. So you want to see this thing start picking back up and moving higher and not set a lower high, okay? And again, as long as we don't break the 2024 high or the moving average and stuff, it could consolidate. That could be what happens, okay? We've basically mitigated a lot of these fair value gaps and things like that. And so, and it has had a big move. So right now you basically see it doing what? It's going sideways, right? It has these big moves, and then intraday it completely sells off, and then another big move up. So extremely, extremely volatile for the small caps right now. Now, what most people don't realize, though, even though the Qs is having problems, when you look over, you can clearly see that the Dow is not, right? I mean, the Dow keeps setting these intraday highs and selling off, but you know, that's a pretty big move up there in August all the way up there. I mean, that's what the Qs normally look like. And I'm going to pull this up. So, okay, that used to be the previous all-time high. It's testing right now to see if it can hold on to it. But the stocks in the Dow are actually have been getting bought up, right? And it's kind of, you know, setting these levels of support as it's going up and stuff. And then when you look at the Dow Jones Transportation, you know, it's been going up in August. Again, it's not a no all-time high or anything. It's not doing as good as just the Dow itself. But that's not a bad thing, right? It's moving up. You would think it would be moving down as everything else seems to want to sell down. But again, what's going up, right? FinTech, we're going to talk about that. We've been talking about it all week. XLE, Jets, Cruise, XLF continues green, which is good for the market. Industrials, utilities, cyber, biotech, healthcare, all that fun stuff. What's red? Well, the big tech, right? Consumer staples actually went red today, which is surprising. Real estate. Then your semiconductors have been under pressure for sure, no doubt about that. And I did enjoy this meme I saw right here before we talk about NVIDIA's chart. So NVIDIA beat the consensus estimate, so that means they did better than expected. And the young granddaughter says, "Sure, Grandma, now let's get you to bed." So I think that's how a lot of people felt. They did do very good, but it didn't really matter. I mean, I think it was way too many calls out there and stuff, and it needed to sell down. I mean, it's up huge over the last, whatever, year, 2 years, whatever it is we've been going on this now. And you can see, one thing you don't notice is if you look at the regular chart versus this chart, this is the extended hours, you can see it really pumped. I mean, this right here, they're in pre-market, and then when they open this thing up, not once, but twice, they got it up to 124, and people are like, oh man, we're so back. And then they sold it off after lunch right there and started selling back down that little gray box. And so the little shaded box we've had in here for a while is below the 50 moving average. But the moving average you always pay attention to in NVIDIA is, for me, it's a 21 EMA. I think some people use a 20 SMA. But as I've showed, I just find this to be more accurate. And what happened? This is what I don't like. It closed below that one. What happened here? What do you see? When this right here, I'm going to bring this in. Here, close below there. Rejection, we go down. Rejection, we go down. Again, right here it comes up. Boom, bounces, bounces, bounces. It loves it. All right, it's in love with it. You know what I'm saying? And so again, actually, let me get rid of that one. That has nothing to do with that one. But again, you can see right here, rejection right here, but then finally it breaks above and explodes. Okay, so the fact it's below it, not a good thing, not the end of the world. It's in that shaded box right there. But again, if it breaks the shaded box, look for that trend line first, and then look for the next shaded box. You got there between like 10, actually let me pull it up here before I can tell you a little closer. 112 on the trend line right there, and then the shaded box is like 106 to 110 if we break down. Again, if it comes back up and gets above at 21 EMA right there, then of course 125 is going to be your first real pressure point. You see where it consolidated to get past. Now, you know, somebody talked about in the comments, and again, look at this right here, guys. I mean, this is absurd. When you're talking about revenue growth and stuff like that, and I mean, I can't remember a stock doing this where it literally just left all its competition in the dust. And I'm talking about billions. I've seen penny stocks do this and small caps. but not a large cap stock. All of a sudden, look at the revenue. It's like, holy cow. Of course you can't keep up with that growth. There's no way to keep up that growth. And you can see, here's the projections. Like, they're going to drop off a cliff, really, if the estimates are right, as far as the growth come 2025 right there. Right? And we got to see how the market is going to handle that, because it still really don't have a whole lot of competition. And if you look at what's going on with these earnings and stuff, it's absolutely still just blowing out the water. And I mean, adding $4 billion every quarter is insane. Okay. And now going on to Apple and some others. Obviously, Apple just said, hold my beer, I'm going to fill this gap, which it did, and it sold off the rest of the day. This one's another one that's not far from all-time highs, guys. So if they want to push this market up, even though I don't know if they will with a 3-day weekend coming up, Labor Day is Monday. A lot of people like to hold over the weekend and sure don't like to go into new positions when a 3-day weekend is coming up, especially going into September, which is historically a bad month, at least in the last 2 weeks. We'll see how the first 2 weeks are going to be. Now, we've been talking about the fintech, right? Obviously, you can see lending clubs green. All of them are green. You know, lending club, and then of course the firm is up like 42% at some point in time of day. Ran into this resistance right here, got that gap right above it. That's basically what it did, was it filled this gap. And so that's a huge move. You would think there's going to be either some consolidation or some kind of profit taking. We'll see, because once again, look at that one. That's Upstart still just kind of trending up. SoFi, which we're going to zoom into this one. We talked about that shaded box. Been there for a while. That's that gap right there to the left. And we hit it today. Finally, it seemed like it's been, I don't know, what are we talking about? It's like 2 months now. But I said, once it breaks that trend line right there, it's been getting held down for a month. Boom. Explosive candle up. Obviously, a firm helps that because it pulled all of them up once again. And so, again, these move as a group, right? Above all the moving averages, 50's curling up on this thing. You know, if it can get above that gap right there and actually fill the whole gap, which will correct this, and that's what's left of the gap. If you can get above that, you're talking about anywhere from 15 to 20% more move, because you can see the levels clearly, right? 919, move up to the next one, 950, right? And so that right there is nothing to, you know, throw shade at. I mean, that's, again, where it's at from right now. If you got to those two levels, about 20 more percent. So, you know, not in a firm move, but a lot of people have been holding this one, and so, you know, hopefully this is finally going to be the time where it actually pushes forward. I just don't know what rate cuts are going to do, because none of these stocks were pre-2015, so none of them were in the rate hiking cycle of 2007 or 2001 or anything to compare it to. So I have no idea how the rate cuts are going to affect it. I would think they can't hurt them, because obviously more people start refinancing their student loans, refinancing homes, refinancing all this other stuff. So we'll have to see. A firm's benefiting from people can't pay their bills, so it's that buy now, pay later stuff. So it's benefiting from something totally different. So I don't know if rate cuts would actually help it or not. That's what we got to see. You can see PayPal right there. I mean, again, this is another one that's been moving up, finally starting to show some life. But you can see, pull up that volume profile, running into resistance. But if it can get above that, because it's such a damaged stock chart, I mean, just a horrible stock chart, man, you could really start cooking with Crisco at that point in time. It's just got to get above by another $2 or $3, which you got to be looking at. Now, understand what's happening. Today, the yield curve uninverted again. I don't know if it's going to stay uninverted or reject here and go back down again. But you can see when it gets uninverted, okay, and I did a whole members video on recession stuff and all this other stuff in detail about this. .com was 3 months uninverted before recession. The financial crisis was 7 months uninverted. And so again, but the thing is, the inversion was so deep. Look at that. That's the deepest in history. So I don't know. It's just a weird thing right now. But, you know, looking at real quick, just to update you on the high yield junk bonds, right? This one's consolidating, but you can see that's when the world was supposed to come to an end right there, and it just took off, right? So the bond market so far is still healthy, which means the market's still healthy at this point in time, which we saw how quickly that can turn, of course. Now, data tomorrow, core PCE, personal income month over month, personal spending, Chicago PMI, revised consumer sentiment. So a lot of data coming out tomorrow, so buckle up for that. I'd definitely be stunned if the market don't have some kind of crazy reaction if we end up getting bullish data, of course, which I think is what a lot of people are expecting. So let me know what you think down at the bottom. Also put your questions for Saturday's videos if you have any. I'll start putting that together tomorrow for you guys as well. Sunday we'll still set up the week and everything, even though the market is closed Monday, but we'll still have Tuesday through Friday, so it'll be a short, nice, volatile week for sure. And so please hit that like and subscribe button on your way out. Feel free to sign up for the memberships. A lot of you have. Really appreciate it. Always feel free to reach out to me if you have any questions and stuff. There's everything you can get with the membership. And I will see you guys Saturday.